Yeah.
Is that on?
Yep, we're good. Hey, everybody. Happy Friday. Happy Finance Friday. Welcome to the first one of the year, 2019. Hope you all had a great New Year's and holiday season. And we are excited to kick off the new year. Jim and I are here today to just update you all on the market, where we've been. We're just going to kind of have a conversation, and feel free to ask us questions and to give us your input and things that you guys want to know, because we want to be helpful and informative and educational, and that is our goal. So if you guys have questions, please comment, message us, follow us on Twitter, Instagram. Do you know all those Twitter handles?
I know mine.
Follow Jim.
I think it's at Jim Novakovic.
At Jim Novakovic. I think our Instagram, I shouldn't be saying this if I don't know, but I think it's just at Nova Wealth Management.
Sure.
So anyway, so we're going to just talk about what's going on in the market, and hopefully it's informational.
Yeah, so first, I swore I'd never do this again.
Here you are.
How many times have I sworn that?
A lot.
Although Amy's out of town just for the day, and so I thought, well, since the market's been kind of crazy for the last quarter, I'm probably overdue to be on and talk.
Yeah,
so.
Everyone misses your face. So
I'm sure they do.
We hear it all the time.
I know they're all looking at me like, who's that guy that ate James? Because I've gained like probably 20 pounds since the last time I was on. So it's really me. I'm just heavier. So, all right. So I was thinking we could talk about just the psychology of what we go through. I mean, I think we went through all of 2017 with no, I think it was like maybe just a handful of 2% moves for the year.
Yeah.
I mean, literally like none. And now these last 4 months, that's all we've had.
Yeah.
And that really takes a toll. I need to move closer, I think.
Yeah.
That takes an emotional toll on so many people. And so I thought we'd talk about that a little bit. Just kind of a recap of the market in September was pretty much the highs. And you had an interesting point that he tried to start a discussion with me about 20 minutes ago, and I'm like, no, I don't want to know. Let's just save it for online. So
right. So I was looking at it because we were trying to figure out, or we were talking about the highs, and a lot of people thought that October is kind of when the highs were, and then it all fell. And I think as a whole, the market, that's kind of been the consensus, is that's where the highs were, and then they kind of fell off. But each sector had a little bit of a different feel. And so what I found was that consumer staples, which are companies like Costco and Walmart, kind of the companies that are strong, that people will use even if you were to kind of fall off and go into a little bit of.
Are those considered staples? When I think of staples, I think of like Johnson & Johnson and.
Yeah, when Johnson & Johnson's one of them too. I just wasn't going to talk about Johnson & Johnson with all the talcum stuff going on. So I just didn't name it. I picked a couple other companies. But anyway, so their high was actually in January. And since then, they've dropped about 15%. But since October, they're only down about 6%. So
since October?
Yeah, since October. So what we saw is a little bit, if you guys remember, in January, it kind of went pretty high and then had a little bit of a fall off. And then it seemed like get to October is when we kind of met back up to that and maybe exceeded it in certain areas, and then started to have another fall off. But some of the sectors didn't get back to that yet. And so it actually was a little bit of a flat year up until then, and then kind of went down a little bit into October, November, December.
Yeah, but last year was all about growth. Like when I think back to 2017, January was gangbusters. I want to say it was up like 6% or 7% in January. And then if you remember the first week in October, the bottom fell out.
Yeah.
5 days, the market was down 10.25% in 5 business days. And I thought that was bad.
Yeah.
But right after that, though, the market turned around, and from the second week in October through the end of September, market was up pretty nice. Mm-hmm. And then October came, and we all know what we've been experiencing since then. Right. A lot of volatility, and it's really all driven from trade and interest rates.
Right.
I think it started with interest rates back in October.
Mm-hmm. Yeah, and then the trade talks, and so then it started to get really emotional. I think it seemed like a lot of just emotional trading, people not really sure what was going to happen with the China trade talks, some of the things that maybe the Fed said that people didn't like as much. And so then it just kind of it got really volatile.
Yeah, very volatile. And you know, we've been saying for years we need a pullback, and it is healthy for the market to have a pullback. And we all know it's healthy when we get these pullbacks because it creates opportunities.
Mm-hmm.
And it creates opportunities where you can buy companies that, you know, you really don't want to chase sometimes. Like Amazon, you know, was up over $2,000.
Right.
You know, it's tough to buy at those levels.
Yeah.
At one point last year, Amazon was up. Oh, I wrote it here. So from December through the end of September, Amazon was up 72% for the year.
Yeah.
And going crazy. I know, it's nuts. And a lot of those companies were like that. Adobe. Well, Facebook was doing really well until they had their problems, but that was mid-year, not necessarily the end of September. But you had mentioned Staples. The Staples they kind of peaked at the beginning of the year because a lot of companies or a lot of investors last year left those staples and went to growth,
which again points to the actual economy, which we heard again even today that job growths are up. So the economy is looking good. We added 312,000 jobs in December
versus 176 expected.
Yeah. So I mean that's almost double what was expected. And then not to mention so unemployment went up just a little bit, but that's because more people are looking for jobs, which is great too. So those are things that came out today that are just showing that we're looking good as a country. The economy looks great. We're adding jobs. It's exactly what people want. And so we saw that a little bit in the market today.
Yeah. And that's the market is sometimes, you know, people say, is the market going to go up tomorrow? You know, like God only knows because the markets are irrational.
Right.
It doesn't, you know, like today it was up 700 points and it's up 700 points because people are feeling better because the Fed chair talked and they actually had Yellen on there as well.
Right.
And so when you get good news, like 312 jobs were created, and that report came out, I think at 8:30 this morning. My first thought was, oh shit, good news is bad news sometimes.
Right.
Because when 300 jobs created versus 176,000 expected is fantastic. That just gives the Fed more reason to raise rates.
Right.
And when the Fed raises rates, the equity markets don't like that.
Yeah. But then what he said today, which was kind of like a double positive, which made, I think, ultimately the market. I think though that news by itself probably would have been bad, but then Powell came out and said that they're just going to let the data dictate what happens. And they're not just going to say we're going to unwind the balance sheet on autopilot, like is what he said a month ago, and those types of things.
Yeah.
He said it in just different ways. He didn't say that they're not going to
say that. He was the story never changed, and he never changed course.
Right.
It just got blown way out of proportion.
Right. I think it was just some of the rhetoric that he used before people didn't like as much, and I think just he reworded it, and it seemed like it was what people wanted to hear.
Yeah. Yeah. So I went through some of these other companies to just give people an idea, because since the end of September, the market's down a lot. But if you look at the full year, we're really not down that much. I mean, since the end of September, I think the S&P 500 is down about 14% since the end of September.
Yeah, with today it coming back, yes. It was, as of yesterday's close, it was down about 17%.
Oh, is that right?
Yeah.
Since the end of September.
Yeah.
Yeah. So we've had a really strong pullback. And again, that's not necessarily a bad thing. I think like we said earlier, it creates opportunities, and some of the things that we've been doing, and we can't do it for all of our clients. Some of our clients don't have options as an option, option as a option.
Yeah.
But what we've done is we've gone a lot to cash. And when there's this high volatility, we kind of feel like let's move some money to cash, get a little bit safer, because these markets are very unpredictable right now, and I think most people feel that it's better to be on the safer side, because it feels a lot worse by getting chopped in half than it does by missing a little bit on the upside. I mean, you have to kind of pick your poison, and so we've erred on the side of caution by going to cash. But at the same time, with the clients that we have options for, we have bought long calls, a little bit of money, not a ton, but you could kind of nibble in a little bit that way. And on big days, you could buy Boeing and Home Depot and Visa and buy these big companies that are not going anywhere. The companies are fine. It's just the market's throwing a fit. So nibbling in that way and buying on these dips has to be done.
Right.
And that's really why you have an advisor, because money's emotional. And when you're down 600 or 700 points in a day, people want to literally jump off a bridge.
Yeah.
They think it's going to be down that way forever. It feels awful.
Right. Well, that's something too to think about, is that, we talk all the time that when you look at your account value, it goes down, but you didn't lose money necessarily.
I know, but they don't want to hear that.
I know, but I think it's something to kind of draw a comparison, is that if you own a house, there are times when your house might go down in value, but as long as you don't sell the house, then you're not losing the money. And the stock market's the same way. And when you own a stock, you don't lose the money unless you have to sell at that point. And that's why this is a great opportunity too, at this time of the year when you're starting, or when if you feel some kind of way emotionally about it, then it's good to talk to your advisor, and maybe say maybe I'm taking too much risk, and it's time to kind of get a new risk number, so to speak, or depending on how your advisor looks at it, and say, hey, maybe I need to reduce my risk a little bit if I'm getting nervous about this. Because if you have a long time to go, like we said before, you can get some companies for cheap right now. And so long term, that's a great opportunity. But if you are maybe a little bit closer to retirement or things like that, and you start to get nervous, you're like, well, that value, if I take out money, then yeah, you are going to lose money. And so it's an opportunity to kind of reevaluate your risk and to talk to your advisor about that.
It's a great point. Yeah, no, that's one of the things we're going to do, because when times are good over the last really 10 years, I mean, since 2009, the markets, we've had our dips here and there, but for the most part, the market's been on an upward trend. And you ask somebody in good times, what's your risk tolerance? Yeah. And they want to go. They're like, the market's doing well. Let's
all
go.
Day.
Yeah. As soon as the market gets bad, that's when you really discover what the risk tolerance is. Yeah. And it's a lot lower than people think. Right. So now that we have quite a bit of money in cash, we're going to get people adjusted here for their proper risk, because it's a lot less than people had thought.
Because it's really easy to say to somebody when you meet them, like, if this were to happen, hypothetically, how would you feel? And usually people are like, oh, I can deal with that if it drops this much.
Well, if you ask them today, when it's up 700, they're like, let's do it. Right. Yesterday, when we were down 600,
it's a different.
That would be a great social experiment, don't you think?
Yeah.
Because it's so true. When you and I were looking at my board, we were looking at the screen. It was all green. Yeah. Everything was green today. It felt good today.
Well, in the last couple of months, I said I'm never wearing red again. Like, I'm so sick of red that it is good to see some green, a full board of green necessarily. So but this is a good time to, if you're an advisor, talk to your clients and see, and if you're a client, talk to your advisor and find out where your risk is, because it's time to figure out what it is, because now's when you'll know. Yeah.
And when you talk about risk, the main piece in the risk equation is your time frame. Mm-hmm. Like you had mentioned, if you're older and you're retired or you're nearing retirement, you definitely don't want to be all in equity. Even though it feels great when you're up 3% in a day, that feels great. But when, if you're retired, you really can't afford to go backwards too much. So now is a great time to take a look and say, okay, if I have 20 years to retirement, fine. What does it matter if it's down today?
Right.
It doesn't matter.
Yeah.
It doesn't even matter if it's down next year.
Right.
If you're allocated correctly and you're in good stuff, it's going to be fine.
Right.
Because ultimately what drives stock prices, so many people I talk to feel like the stock market is like gambling because it is irrational. Like, why are we up 700 today? Because some guy in the Fed said that we're going to just determine our hikes on data. That's really it, really. And maybe they're going to get something done with the Fed. You were telling me. See, I can't even anything political. I always mute my TV because
with Trump and the wall and the closing of the government, which isn't necessarily a huge deal yet. And I think some people try to really overplay it. Some people underplay it. But it can long term, if it continues, it can cause some waves, I guess, is right now it's ripples, but it could potentially be a little bit more.
Yeah.
But I think that it seems like they're wanting to come to a conclusion. They're meeting this weekend, so hopefully something will come out of that. But yeah, you just don't know on a day-to-day.
So I had a really good point, and I don't remember what it was. I'm getting old. What do you think of the beard?
I think it's good.
You haven't said anything about it.
Yeah.
So I
you
think
had
you're
mentioned
lying.
it to someone. No, I think it looks good. If I could grow something like that, I would.
Well, I'm trying to take the attention off of my fat. So, because the first place I gain weight is in my face. I get this big fat head. So if I put some hair on it, maybe it won't be as obvious.
Yeah.
Yeah. Is it working?
Yeah. You guys let us know what you think of the beard. You can't see it great in the camera, but I think it looks good. I also don't think you look like you've gained a ton of weight. So there's that. But anyhow.
Anyway, so I guess that's I had a good point to make, and I don't remember what it was. So I think we're good. What time?
We're at 16 minutes, so I think that's perfect. That's probably pretty good. But
I'm always yelling at Amy to go quicker, quicker, shorter. So
shorter's better usually. So, but anyway, again, if you guys out there don't know what you own, you should. And if you don't know what your risk tolerance is, or if you feel like you're nervous in this time, definitely meet with your advisor. If you don't, give us a call, message us, contact us, and we would be glad to help you out with that. But on that note, have a great weekend.
Happy New Year.
Happy New Year, and we will see you all next week. Have a great weekend.